Hello everybody. Now first of all, before I say anything, a disclaimer. This is not financial advice, but rather my own analysis and my own observation of what is happening in the market. Another thing, this is mainly aimed at Tom Nash's community. This is where I mainly speak to people and where people have heard my opinion and understand where I'm coming from. Now, I don't want to waste any time to anybody who's watching out of the title. Basically, I'm going to say I have no idea whether what we have seen before was the bottom. I assume, and currently it really depends on the market sentiment. I hope that I'm correct, that this was the bottom. And I do think that we are looking at an upcoming rally, but I will explain before you misunderstand what I mean. Now, what you're seeing on my screen right now is the SPX, S&P 500 in other words. The red line you see on the bottom is the SMMA 100, smooth simple moving average, based on an average of 100 candlesticks. Since right now we're looking in the weekly time frame, you can see right up here, that means every candlestick here represents the change in price during a single week of trading. Now, I have predicted and said that I assume that would be at least the current bottom, right here where the SPX price action has met this SMA 100, SMMA 100, pardon me, at a price of 3,643, if I remember correctly. I can't pinpoint it down accurately at the moment, but I think that's close enough. Now, why do I think we have seen a bottom? What you're looking at is the price action from 2020, roughly. You can see right here, if you measure and pull a Fibonacci retracement on this wave, on this mega wave, you'll reckon this, you use this as your 100% movement. You'll recognize that this is merely 30% correction, which is very normal and very likely on such a big movement on price action. We all know why it happened, because the Fed basically went brrrt and bought up like crazy, and this is the outcome. We're suffering the outcome right now, and really the market sentiment depends on how strongly and how hawkishly the Fed will increase interest rates. I personally believe the next interest rate hike will look at 100 basis points. On Tom Nash's community, we spoke various times why they cannot go any higher than this. I don't believe they will go 75 basis points because of the Taylor rule, meaning they really need to make an effort to catch up with inflation, otherwise they're not making a dent. Now, I will add the drawings that I usually have, which are slightly important. Maybe they will look a little bit confusing to some who do not know what I'm talking about, but there are plenty gaps that has been opened lately in the price action, and all major indices really follow the same sort of pattern, and accordingly, most stocks, most assets, as they are correlated and anchored to these indices, they have a very similar price action. So lately we have seen the market opening a lot of gaps and basically moving sideways rather than down. Some people would argue this is a dead cat bounce. I don't think it is. Don't forget there are plenty of financial institutions, very smart and big ones like JP Morgan, for example, talking about the SPX closing the year roughly 4,800, and obviously the price action is not going to teleport there, but rather will grow there and get there gradually. And they might make some sense because we have seen the market basically price in a lot of interest rate hikes. We cannot say to what extent at this point, but I believe the upcoming ones are already priced in, and thus we're looking at a rally. The market still is very uncertain. Regarding the price action itself, I personally would have been significantly happier to see the price action, instead of rallying stupidly like we did right now and very uncertainly, I would rather see it close the gaps that we have opened. For example, the one we have opened between the June 17th and June 21st. I would really hope to see that gap close before we test that SMMA 100 on the weekly again, because that will create a lot of panic, a lot of pain. We already will have to experience a lot of pain to return all the gains we had during the past couple of weeks just to do that, just to give a lot of technical traders some comfort. And if you can see over here, I was expecting that to happen prior, which it didn't. But now conditions looked significantly better, and it looked like we are about to close the gap. Then we found support at these previous highs. These are long-term supports, and this is why it's very important not to delete ever anything. By the way, to anybody who's asking themselves, the platform I'm using and you're observing currently is TradingView, a wonderful website which I personally recommend to any and all the traders and investors. Absolutely, this is an amazing tool to beginners and advanced traders and investors alike. I wish I would have the sponsorship with them, which I don't. So I just say that because I'm absolutely in love with the tool, and it just gives me everything I need. And I'm certain it will give you the same. Now, this is pretty much it. I think and I really believe that we will close these gaps, because anybody who heard me speak about these things prior in Tom's community on the Zoom calls, which, by the way, obviously I recommend everybody and anybody to sign up, pay these $5 a month and join up. We have an amazing community there on Discord, an amazing community overall, great Zoom calls, absolutely hectic, very good and useful information for traders and investors. So I do recommend that community, and there people heard me speak about how gaps usually get closed. If you ask my experience, if you ask me, usually it happens, I would say anywhere between 99 or 98% of gaps get closed. Now, to say that all 100%, that would be incorrect. There are some anomalous moments that gaps do not get closed, but it just might take longer than some of us expect, and in my experience, gaps do get closed. So I truly hope we'll close these gaps that we have opened before we make an actual rally. Now, the rally will be based on market sentiment and the fact that the Fed is not too hawkish and will try to prevent the market sentiment from thinking we are in a deep recession, when in reality we already are. It's just that they will not be willing to acknowledge it. Again, I will point to some of Tom's latest videos where he explains in depth exactly what do I mean. And in fact, I will quote Tom basically by saying that instead of saying, well, word games, we will see a word Olympics, to that extent, if you ask my opinion. To how much the Fed will try to convince the markets that everything is fine. And if you ask me honestly, other than well, China crisis right now, we don't have anything that is that bad. And we really have to hope that the Ukraine-Russia crisis will blow through and energy prices will stabilize. And that's pretty much all I have. I wish everybody a wonderful end of the weekend.